regulation is going to be key, and I think you were very poignant and prescient when you had mentioned that it's going to take governments decades, and even now, we know what's going on where there isn't any meaningful regulation right now in cryptocurrency, which is what some have pointed to as a cause of what's going on with Celsius and all, and obviously SBF and all that. So, and FTX is that if there was guidance from the government, then, it would kind of help in that regard. So can you talk to us about what is the landscape of kind of, regulation, both on a federal and a state level?
Great, great question. So,
yeah.
So when we actually started, so our platform, what we did is that we built a real estate investment platform allowing anybody to invest into income producing properties and share the rental income and appreciation to fractional ownership.
Right.
But what we quickly realized right off the bat, we're selling a security. We're selling shares within a corporation that owns the asset.
Right.
So John, if you actually put $100 in, we actually have to look at it from the security side. You're not just buying real estate, you're actually buying shares within a corporation.
Right.
And that actually kind of put a hiccup into our development plans for democratizing real estate investing. But what we did is that we built a compliance engine to make sure that every investment is compliant with all security regulations, starting in Canada, we're a Canadian-based company, and soon to be in the United States. So our compliance engine will determine if you're a retail eligible or accredited investor. We make it super simple. We actually treat everybody as a retail investor. So documentation, we still do KYC, know your customer, AML, and then basically we ask you some additional questions with risk acknowledgement, and then you can connect your bank account. We take no crypto. It's all about connecting your bank account. In Canada, we cannot accept credit cards as an investment either, so we can only connect your bank account. In the United States, we can. But at the end of the day, we wanted to make sure that if you now then said, I make more than $107,000 per year and I'm an accredited investor, we're going to go into suitability, net financial assets, determine on how much you can invest in a calendar year. So our compliance engine is very, very robust. And going back to your question about, the national, like the federal level or the state level, we're more focusing actually on the federal level. So we use the instruments that are available to us in the United States and in Canada, but let's talk about the United States. But we'll use a Reg CF, so regulation crowdfunding, which will allow us to raise up to $5 million through non-accredited investors. And then we max them out at $2,200. If they declare that they are accredited, we will then ask them for more information to prove that so they can make a larger investment.
Got it.
But the Jobs Act allows us to do that. But if now we can actually do bigger investments, which would be more than $5 million, we can go through the accrediteds and use a Regulation D or Reg A Plus if we want to take international investors. But our platform digitizes that whole entire process, making every investment or every asset owner that wants to raise capital on our platform, all their deals are going to be compliant. And then we digitize the share structure that attaches all their information, which is their KYC, AML, subdocs, when they paid, how they paid, accreditation status, so that every trade is going to be compliant.